Whether you're dreaming of a retirement with sand between your toes and a cold one in your hand, hitting the road to chase the winds of adventure, or spending time with your grandchildren, this show is intended to help you get there. Welcome to Coasting in Retirement with your host, Josh Knoll. You've worked too hard throughout your career to spend your retirement worrying. So sit back, kick up your feet, because we've got lots of financial tips and tricks to share to help you get exactly where you want to be. Here's Josh.
Good afternoon, everyone. Welcome in. Welcome to Coasting in Retirement. That's right. We're back with a fresh episode coming off our recent hashtag Beat the Heat 2023 vacation.
That's right.
To upstate New York. I'm your host, Josh Knoll, along with my co-host, Michelle Lee Melton, my radio partner in crime, my wine-sipping ride or die. Michelle, how you doing?
I'm hanging in there.
You're hanging in there?
Yeah.
Things are trending up and to the right.
I'm not sure, Josh.
Well, we're going to get back on track here. So we're back in studio. We're here in Coastal College's recording studio in beautiful downtown Fairhope. We're excited about the show that we have today. We're excited to get the rust shooken off from our trip. And as usual, we got another great show for you, of those of you tuning in. So listeners, Michelle and I are here today to discuss financial topics relevant to those of you in or near retirement, living your best life along our part of the Gulf Coast. If you're just tuning into the show, welcome. You're listening to what we consider Lower Alabama's most dynamic and interesting financial radio show. Here's what we got in store for you today. First segment, deep dive on the topic of the day. And I'll give you a hint. It's Josh Day. There you go. Second segment, it's about 20 minutes past the hour. It's fan favorite, Michelle with the news of the week. Third segment, roughly 40 minutes past the hour, is Josh's crystal ball and big mouth. So buckle up. We got a lot to get to. So a quick background on me for those of you new to the show. Again, my name is Josh Knoll. I am an independent financial advisor, fee-based financial advisor. I hold my FINRA Series 65 securities license, and I'm the owner of Gulf Coast Financial Advisors. That's an independent investment management financial planning firm. We got offices in Fairhope and Orange Beach, Alabama. You can find more information on me and Gulf Coast Financial Advisors by visiting our website, gulfcoastfa.com, or feel free to give us a call anytime, 251-327-2124. Now, if you just missed that contact info, do not worry. We will repeat it several times throughout the show. All right, Michelle, so before we get on with the show, should we brag about our recent trip to Finger Lakes, New York?
Of course.
All right, fill us in, brief description. Let's get you back on track on Happy Land.
Well, we went up there to chase waterfalls and then chasing waterfalls with all kinds of wines that they offer up there. For example, Seneca Lake, which is one of the largest of the 11 Finger Lakes, has 200 wineries, breweries, cideries on it. Yeah, they have cider too. A lot of hard cider, people. A lot of
hard
apples.
cider. That's right.
A lot of Riesling.
A lot of beautiful waterfalls. It was incredible.
Yes, over 1,200 waterfalls. We saw takeaway 2 zeros, maybe a little bit more, because some are big and some are small and some are medium and some will try to kill you.
And we saw people complaining about the heat. It was, 81 degrees outside?
That's the last day we left. It was 81.
Right.
I think every time we sat outside to stare at a vineyard or a lake, it was probably 78, and they thought it was blistering.
Just blistering.
We were crazy.
We're like, come to Lower Alabama.
You have no idea.
Well, so we were going to record the show remotely, but that didn't happen.
Josh failed.
As you can tell. So anyway, let's get on with our main topic. So regular listeners of the show that will know that I'm originally from the backwoods of the Ozarks, certainly not upstate New York, which means that I grew up with a lot of country music in my life. I don't know all the lyrics, but I know a pretty good chunk of lyrics for most country songs. Call it late 70s, early 2000s. So the newer stuff I don't pay any attention to, but that time period I was pretty in depth. So what we did, today's episode is going to be inspired by a silly country song from that time period. It was one that was released 22 years ago, which makes me feel a little bit old. It's called I Want to Talk About Me. It's by Toby Keith. Do you know the song, Michelle?
You've sang some of this. I'm not familiar with it. I told you the other day, I was listening to De La Soul, Me, Myself, and I, which I'd prefer over Toby Keith any day.
Well, we're going with Toby Keith.
That was 1996, by the way.
No, listen, I don't recall all the lyrics to the show. I just know to that song, but I know the chorus goes something like, I want to talk about me. I want to talk about I want to talk about number one, oh my, or something like that. Okay. I just butchered that badly. But so anyway, why do I want to talk about me? Well, here's the thing. Michelle and I spend a lot of time talking about big, broad economic topics. And we talk about all of these important financial companies and concepts and things like that. And while that's a good thing to do, and we'll continue doing it, today I just want to talk about what we do at Gulf Coast Financial Advisors. I want to talk about me, Michelle. Good enough?
Okay, go for it.
I'll grunt to. All right. And here's the thing. We're going to use a cheat sheet that you can actually download from my website,
Ooh la la.
gulfcoastfa.com. It's located on the main page, and it is titled, We Are Fee-Based Financial Advisors Offering a Wide Variety of Services. Now, we're not going to take the time to talk about every single thing we do for our clients because we do a lot. The show would take too long to take the entire episode. We'll just hit the high points. All right. So like I said, I want to talk about me with this show, but putting, kind of jokes to the side, what we're really going to be talking about is what we do for you, our client, our potential client, if you will. So as with every good story, let's just start at the beginning. So, Michelle, here's what I'm going to do. We're going to go through the things that we do for our clients. Okay. Again, talking about me and the other the team members at Gulf Coast Financial Advisors, if you will.
Which involves me.
That does, yeah. So let's do this. Let's. Do you remember? We'll kick it off this way, Michelle. Do you remember your first day of school?
The very, very first day.
Very first day, or even first day of high school?
I remember the first day of high school.
Were you a little nervous?
I even threw up, but I looked cute. Yeah, I was nervous.
All right.
Yeah.
Well, see, most people get nervous when doing something new, especially if they're making a major shift in their lives, right? You remember your first day of high school. You don't remember your first day of your junior year, typically, or things like that, right? You don't know where the class is located, where the bathrooms are, your teachers' names.
Combo to the locker, still have nightmares about that.
Right. I was still figuring out what the heck classes I even had usually because I was usually a little bit behind. But so that leads us to the important thing. One of the most important things we do is the first thing we do with our new clients at Gulf Coast Financial Advisors is called welcome orientation. And here's the thing. We recognize that changing to a new advisor is a big deal. We recognize going with an advisor for the first time is a big deal. And for those of you all that have dealt with other advisors, you'll pick up pretty quick that we don't work like every other advisor does. There's so many different things to understand and figure out, such as how do I find my statements? How do I read them? Where do I access my accounts online? All these things. And these things can be frustrating without simple answers. So what we do in the beginning, you get a considerable amount of attention when we're onboarding. We're going to communicate with you, make sure you understand everything that is happening, that you know exactly what we're trying to do to help you reach your goals. All right, so that's first, all right? Next up, Michelle.
Yes.
Next question. Do you like managing your own investments?
No, not really. And I don't even know what you call manage because mine's pretty laissez-faire.
Well,
I check them 3 to 4 times a year. That's it.
Well, that's good. Okay.
And don't do anything about it. Just like, okay.
Well, here it is. So I want to talk about me. The next thing we do, or one of the things we do, there's no particular order, but they do kind of flow in a particular pattern, is we offer experienced investment management. Again, if you want to see a deeper dive on this, just go to the homepage of our website. We've got this as a downloadable PDF. But basically what we do, we work our investment. We have a particular style that we use. We're portfolio managers. We're not day traders. We're trying to do things that are going to hit your risk tolerance and your time horizon. For a lot of our clients, that really means trying to preserve what they've built up and then generating some income from that, or the appropriate amount of income from that. So hopefully you can not only satisfy your retirement needs, but maybe leave a lasting legacy to your heirs or charities of choice. We also assist, and we'll talk a little more about this later, but we also assist with any necessary tax loss harvesting of current positions inside that investment management piece. With that piece, and we've talked about this on the show in the past, a lot of times when people think about advisors, financial advisors, especially if they've dealt with one from, say, 10, 15, 20 years ago, a lot of times they think about brokers or somebody that just handles the investment piece. We do that. That's important. But probably the bigger picture thing that we do quite a bit more of is comprehensive financial planning. That's also in this sheet. There's a lot to plan for in a solid financial plan. Most areas we're going to touch on of your plan are going to be things that we hit once. We don't ever bring it up again. But then there's going to be a lot of things that are ongoing and changing. Life evolve. Life changes. I mean, my gosh, Michelle and I, we've seen so many changes in the last 12, 18, 24 months, right?
Yes.
Yes, our financial plan would need to reflect that. So we review all aspects of that plan regularly. And then something I just alluded to a minute ago, tax planning. Now, I want to be careful with this one because neither Michelle and I are CPAs. We do not provide tax advice. We do not do tax preparation services. However, we do have in-house a fellow advisor named Will Stye. He is a CPA by training. Again, he does not do tax preparation. He's just been a licensed CPA now, I think, for 25 plus years. And what basically what we're looking for there, and we're going to circle back to it, is to review existing tax returns to identify any potential tax savings, any available phase-ins or phase-outs, so that we can make forward-looking tax recommendations. Again, that's not tax preparation. That's your CPA and accountant's job, but we typically work hand-in-hand with those people. All right, next up, Michelle, one more question. I think one more.
Drill here.
As we will discuss later in the show, more of you, less of me. That's the secret sauce for this show.
Of course.
That's right. What is the most important thing for you financially when you retire?
I don't want to go broke, and I don't want to have to go get a part-time job as a senior citizen, like we've told our listeners about. And I want to be philanthropic and travel.
Okay, so we'll capture the first two there. Well, no, that's a great answer, actually. So the main thing is you want to have enough money, income to retire like you want to retire. You want to make sure that income lasts all the way through. Don't do like the silly country joke that you hear a lot of times. You don't want your last check to bounce. You want the money to be there, not run out of it. And you want to be able to do things with, you're very charitable. You're involved in a lot of organizations. Your goals and dreams are pretty similar to a lot of people coming into retirement, right? So one of the things we do at Gulf Coast Financial Advisors is part of the comprehensive financial plan is a customized income plan. What's that mean? That means we're using planning software. It's going to analyze your portfolio data. It's going to provide a solutions-based visual roadmap. Think of it kind of like a GPS, if you will, for your income planning. Particularly you business owners, if you decide to sell your business and retire, because it's one thing to come out of a W-2 or even a 1099 contractor role where you've got some type of steady income and then you retire and you live off your investments. But a lot of times when you're a business owner, you live out of the cash flow of the business, and all of a sudden when that's gone or mostly gone, it's a pretty significantly different conversation than you would with somebody that maybe is retiring out of a W-2 situation. We can help with that. We're going to give our contact info at the end of this. All right, and then a couple things quickly here. Michelle, we do quarterly strategy update meetings. Exactly like it sounds. We try to make ourselves available, portfolio reviews, answer questions, look at net worth statements, look at cash flow. We use planning software to do those things. Nothing we do there is super unique other than I feel like we just try to dive into the details a little deeper than maybe other financial advisors do. And that's probably just simply because I've done a whole lot of other things in my life other than be a financial advisor. I got quite a bit of business experience. And then another thing I think is really important to our clients, we coordinate all of your financial professionals. What does that mean again? Typically, other specialists, if you've been successful, particularly you business owners, if you've been successful, more likely than not, you've got some type of financial team in place. You've got a CPA, you've got some attorney or attorneys. You may even have like another advisor, or maybe you just got a broker that handles one piece of your investments. That's all fine. Our job is to work closely with your existing professionals and to try to help get you where you're trying to go as much as you can. For example, we do some estate planning. We can offer that in-house. If you've got somebody that you bring to the table, we can help them work with drafting your estate plans, your trust documents, updating your will, getting power of attorneys, all these things. We work with CPAs all the time, particularly with Will Stye's involvement. He can speak the CPA language at a level that I don't even try. But we do work hand in hand with all the financial professionals. And generally speaking, in this, we want to make sure we give deference where deference is due. But often what happens is we kind of evolve into the quarterback of your financial team. That's really our role there, okay? All right, and then now I told you I had the last question. I got one more question for you.
Oh, my goodness.
Yeah, this is going to kind of circle back to I asked you how you were doing the intro to the show. And I thought you were going to say you're just doing great, but you're...
Right.
Right. So, Michelle, you've had some home projects recently.
Had? No, it's current.
Well, would you say one of your frustrations was lack of communication?
Yeah, oddly enough, I've communicated a lot today, and but yes, for however many months this has been now, 8? No, 4. Because we're on the 8th month, 4 months.
Well, it's been a minute.
Yeah.
Okay.
Too many minutes.
Well, and here's the thing: not only in the construction business, what you're dealing with, or in or healthcare or anything like that, especially in the financial advisor world, lack of communication can really drive clients nuts.
It drives anybody nuts. It's just human nature.
That's right. Yeah. So personal contact from our team. This is one of the things we do. We strongly believe that you should be able to get someone on the phone when you call during regular business hours.
People prefer real persons. We
do everything we can to answer your phone call. If we're unavailable, we'll make sure that we get back to you as soon as we can. We don't wait for you to call if we need to check in, especially throughout the year. And, I shouldn't say this, but I make myself pretty readily available, as you've seen, Michelle, right? Back when I was construction, and back to your point, I was in construction, my phone was blow up all day. My dad was with me, we were working, and my phone was just ring, 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 ring all day. And I got done at the end of the day, and I said, "See, Dad, that's why I can't, get anything done. And oh my gosh, I'm so stressed and everything." And he said something that will stick with me probably till the day I die. He said, "Son, I would be worried when that phone quits ringing." So consequently, what I do, and as anybody that has called through the radio show, if I'm not in the office, I have the number forwarded. I answer the phone. I like talking to people. It's kind of what we do. And we
even did it on vacation.
We even did it on vacation.
You did. I didn't.
That's right. So I put my money where my mouth is, and I listen to what my dad says. I'd be worried when that phone quits ringing. Fortunately, it rings quite a bit, so it's good. All right. And then this is something kind of for, it makes us unique, I think, in some degree. It's concierge financial services. Okay. What does that mean? I alluded earlier about being the quarterback of our client's professional financial team, if you will. But typically what happens with clients that we really develop a strong relationship with, which is a pretty good chunk of them, we end up kind of becoming at least some type of sounding board or some type of advisor, not just with their investments or financial plan, but sometimes when they're looking at buying new cars, looking at buying property, homes, vacation homes, rental properties, business succession planning. We're hugely involved in that with a lot of our clients, helping them with their estate plans as it relates to that business succession planning. We can even point people in the right direction with employee benefits, all these things. And more or less, basically, when you are going through a significant financial decision or purchase, we want to be part of that. And, as we've said in the show in the past, it's your money, not ours. I'm not here to slap your hand, but I'm basically here to help you all see how your purchase or financial decision fits in with the rest of your financial plan. That's one of our main jobs. And then the last one, Michelle, honestly, is kind of a little bit of a bummer, but it happens. And I've been in business long enough to help people with this. It's a final transition help. Invariably, someone's going to pass away, especially when a loved one passes away. It's challenging to deal with everything that's got to be done. Our team can help you with that. We can assist in helping call utility companies. We can help with finding lost accounts, adjusting passwords, all these things, looking down insurance policies. I have an insurance background, and I have looked at hundreds and hundreds of insurance policies at this point. Not that I've seen them all, but I know how to kind of read the cryptography, if you will, of some of the older policies, and we can help you with that. So just know that we'll be here so you can focus on celebrating the life of your loved one as you adjust to your new life. All right, so folks, that's it today. Any final thoughts, Michelle, before we move on to segment 2?
No, I got it. Yeah,
you got it?
Yeah.
Okay, so like I said, I wanted to talk about me today. That's not everything we do at Gulf Coast Financial Advisors, but it's a pretty good chunk of it. So if you're interested in learning more, then why don't you give us a call at 251-327-2124. And of course, you can always make an appointment on our website at gulfcoastfa.com. Now that's GULF, like the Gulf of Mexico, Coast, as in the name and the title of the show, and then FA as in financial advisor, or Frank Andrew, if you will. gulfcoastfa.com. All right, folks, coming up next, there's always a lot going on in the world, particularly the world of finance. And this past week was certainly an example of big news in finance. Every week, Michelle and I scour what she calls the interwebs for helpful financial articles related to our topic of the day, especially articles that pertain to those of you in or near retirement. So why don't you join us after the break to hear Michelle and I discuss this week's relevant headlines in our Michelle with the News of the Week segment. Stay tuned. Whether it's building a business from scratch with your own two hands and wanting to maximize the financial impact of those sacrifices, or growing a great nest egg by being a dedicated and reliable worker for years, or choosing to live a life well within your means in order to accomplish a lifelong dream of retirement, the last thing you want is to go with the wrong financial advice after you've worked so hard to accumulate your assets. You've also probably spent most of your life putting others' needs ahead of your own, and now it's your turn. We can help. Gulf Coast Financial Advisors is a locally owned, independent, fee-based financial planning, investment management, and tax planning practice. We have offices in Fairhope and Orange Beach. We serve all of Baldwin County and the Gulf Coast. We also have an easy-to-understand fee-for-service model with no sales quotas, no proprietary products. Our ultimate responsibility is to our clients' goals and dreams. You can reach us at 251-327-2124 or find us online at gulfcoastfa.com. That's GULF, like the Gulf of Mexico, Coast, FA as in financialadvisor.com. Welcome back to Coasting in Retirement. Your host, Josh Knoll here. So as we discussed before the break, every week Michelle and I scour the interwebs for helpful financial articles related to our topic of the day, especially articles that pertain to those of you in or near retirement. Michelle and I are going to help you all understand and decipher the deeper meaning of these headlines, or at the very least, we'll provide some context. So without further ado, here's Michelle with the news of the week.
All right, Josh, let's kick it off with the well-known investment news site, Barron's. They have a fresh-off-the-press article titled, quote, "The S&P 500 rose 3% in July. The good times should keep rolling," end quote. This article points out that the S&P index hit its high of 4,796 way back in January 2022. But a company called DataTrack, nerds, says that the implied target level for the S&P 500 is about 4,900, which means it could end the year at an all-time high. Wouldn't that be something?
That would be something.
Yeah. So the S&P is in the 4,500 point range as of today, if I'm certain.
Of this recording, right?
Yeah, right.
Yep.
Today. Yeah, the recording, which is not that day. But anyway. So raw math says that it's about a 7% gain. So here's my question, Josh. The last time the S&P was this high, we had way lower interest rates compared to now. Is that a track accurate? And how does that math work?
All right. So yeah, when you say the implied target level for the S&P 500 is 4,900, what that means is it's kind of a projection that probably DataTrack and some other companies do, saying based on all the aggregate of the financial information, even though the S&P is at 4,500, we think it could be at 4,900 now, or at least by the end of the year, which would be an all-time high. It would beat the all-time high of about 4,800 back of January 2022. So here's the thing, Michelle, how does the math work on this? It works this way. This is what is called a top-heavy rally of the S&P. It also affects the NASDAQ. Most of the gains are going to be in what's called the Big Seven. I think it's called the Big Seven. If I butcher this, listeners, forgive me. I'm doing this kind of top of my head, but you're talking your big tech giants that have been all over the news here recently. That'd be Apple, Microsoft, Tesla, Meta, which is Facebook's corporate thing. I can tell you Meta because I looked at it the other day. Michelle, Meta is up 3x, 3 times the value of where it was last year.
At this time?
It was somewhere in the neighborhood of $90, and I think it's trading somewhere around the $350. I should have wrote this down. I think it's $315. So I mean, it's up over 3x since last year. Amazon, NVIDIA, which I have a hard time pronouncing, and then of course Alphabet, which is Google. So this is a really top-heavy rally. If you were to take those 7 companies out of the NASDAQ or the S&P, you would probably see a fairly modest gain this year. Nothing like it's been.
Not as dynamic.
So the question is going to be, is the S&P, the implied level, 4,900, is that going to work? Blah, blah, blah. The question is going to be, are these companies, these big companies that are part of the S&P 500, which would be the 500 largest by cap size companies in trading in the stock market, are they going to continue with their gains to get the average up? Who knows? I mean, that means that Apple is going from, a $3 trillion company to a $4 trillion company. I guess it could happen.
Sure.
I'm just going to be surprised to see it happen by the end of the year. I think part of this points to the fact, too, is, and I don't have the number here, but there's just a whole lot more money in circulation. We poke fun at my economics degree from the Harvard Midwest Missouri State a little bit. It was a good degree. But I know we studied in depth the money supply, M1, M2, and all this stuff. And I don't know, you financial nerds, you economic nerds out there can look it up and send information to the show. But my guess is the amount of total money in circulation is trillions more than it was.
Really? That much?
That much. 5-10 years ago. We'll find out. We'll do it next to Josh's big mouth and crystal ball. We'll find out. But the point of it is there's just that much more money to dump into all of this stuff, pushing valuations higher. Will it last? Will it get to 4,900? We'll save that for our prediction standpoint. I'm dubious because it seems like right now Apple, Microsoft, Tesla, the Big 7, the Big 10, the Big 20, whatever, seems like they've been screaming along at a pretty good rate. What we really would rather see is a more broad-based rally. That would give all financial advisors, investors a little bit more ease of mind, if you will, that this is sustainable. So very good. Nice article. What you got next?
So next, this past May, we released episode 11 of Coasting in Retirement, where we talked about 5 investments to avoid in retirement.
Yeah, so on that, let's point that out real quick, Michelle.
Yes.
For listeners, if you're listening to this on 106.5 FM, you can find all of our previous episodes. Go to Spotify, just look for Coasting in Retirement. I think we should be the only show with that name in there. Or if you're not a podcast listener or not familiar with Spotify, just go to my website, our website, gulfcoastfa.com, and go to the podcast link. You'll find all the old episodes plus the show transcripts. It's pretty helpful. All right, sorry, Michelle, let me interrupt you.
Okay. So our dear friends at Investopedia have an article titled Tupperware Gets a Seat at the Meme Stock Table as Investor Interest Hots Up. I don't love that. That's actually what it reads. Instead of heats, it reads hots. I don't love that. So,
Chat GBT? Is this
oh my gosh.
What's going on here?
I talked to one of those today. I was not happy about it.
I think somebody was just working too fast. Hots up. That's pretty good.
Well, it got published, so there you go.
Come on,
okay.
Speedy.
Hots is a type of food, right?
I guess, yeah.
Okay.
Hot topic or hot whatever.
Okay.
Anyway.
This article states that despite being in danger of being delisted, why did I write all those D's? From the New York Stock Exchange and the Tupperware's own management team warning that the company just might not survive, the company stock is up 450% over the past month.
Tupperware.
I didn't know that was still a thing. Are they still having parties? I don't know.
Well, we're going to talk about that.
Oh, perfect.
All right.
Okay. The article also updates the status of other meme stocks. And news flash, apparently there's an exchange-traded fund that specializes in, guess what? Meme stocks.
Meme stocks. Here we go.
Intro to the tutu dancing bears that goes in my brain when I think of memes. So anyway, guess what the ticker symbol is for it?
Meme, probably.
You are correct.
Oh,
ding,
good
ding.
one. Right.
Yes, and that's super cute and spelled correctly. Thank you for
funny.
that. So it sounds like all rainbows and lollipops on the meme front. But should retirees still avoid them in retirement?
All right, so let's start this fun topic for retirees and your retirees. Michelle and I would be on the cusp of probably remembering Tupperware parties. I would think that would have died out in the 80s, right?
Yeah, I mean, I definitely remember them.
Yeah. Well, so the Tupperware thing, I mean, I'm sure there's two things. There's two things going on here. All right. So first, Tupperware is a going concern. I'm going to take a guess, and I don't pay a whole lot of attention to Tupperware, both as a stock or as a utility. But I would imagine they got a considerable amount of competition with other companies that can do what they do. They probably had some kind of patent way back when, and of course they used the
pre-Pyrex or something.
Right. Yeah, that's right. And then they used the multi-level marketing model that when we didn't have the internet and all these things.
Yeah.
Right. It worked then. It doesn't anymore. Right. Or at least as far as I know, it doesn't.
No, it doesn't.
Now, as far as it being up 450% over the past month, here's the thing.
Shenanigans.
It is. And the funny, so a couple things. These are being driven up. It's a social media thing. It's people wanting to, a lot of investors had shorted the Tupperware stock. What does that mean? It means they've taken positions that when the stock would fall, they would gain. When the stock gets pushed up, those short positions expire, and consequently the short sellers get stuck with a big bill. It's kind of a cute way to stick it to the short sellers, if you will. But the problem is, at the end of the day, should retirees avoid these in retirement? Yes, because here's why. As with all these meme stocks, and you've seen a lot of them pop and go up. I don't know if the day traders realize this or if they're just too sucked into this whole environment to realize this. But when the management of the company tells you that, hey, we are actually probably exploring bankruptcy, more often than not, it's not every single time. It depends on how the bankruptcy is structured. But more often than not, that means the stock in the company is going to go to zero.
Yeah, quickly.
Yeah. So congratulations on you. You shot the thing to the moon, and now you got something trading at $10 or $15, and you've got 100 shares of it, $1,500, $2,000, whatever it may be. You literally, all it takes is a couple pieces of paper, a filing, and you've just burned that money to the ground. So it's all cute, it's all fun. I get it. The ETF, the ME as the ticker symbol. That's funny, but at the end of the day, this is the kind of nonsense that gets washed out once the market typically, often, Michelle, is emotional in the short run, but in the long run, fundamentals tend to rule the day. A lot of these things, they're cute for a while. They have a very short duration of term period, and then the market gets back to fundamentals, and they go on down their way, and everybody forgets about them. So still avoid meme stocks in retirement. This is, and even if you got if you want to have a couple pieces of stock of Tupperware just for nostalgia.
That's what I was thinking about, nostalgic Tupperware pieces that I might have from the 80s parties that my parents had.
Right.
I mean, maybe hold on to those for funsies.
I just remember mine always being mismatched.
Yeah, I think they did on purpose, so you had to go get more.
That's right. All right, what you got next?
Okay, so let's bring in an article that gets us back to our topic of the day, or more specifically, you request to make this episode all about Josh.
I want to talk about me. Is that right?
Me, myself, and I. Better, De La Soul. Anyway, so you mentioned that Gulf Coast Financial Advisors offers tax planning services to its clients. Well, Forbes has an article titled "Why Businesses Should Start Tax Planning Today." Pretty straightforward article. It defines what tax planning is, it lists the reasons why tax planning is important, and it makes the case that pretty much any successful business should incorporate tax planning, regardless of the company's size and some other factors. I personally find tax planning a huge snooze fest and would rather talk about meme stocks due to the dancing bears that are happening in my brain right now when I think about it. So feel free to try to work our radio listeners into frenzy with your feedback on the riveting topic of tax planning.
Well, here's why it's important. Okay, so most tax brackets, capital gains, all the way through income tax are going to be, this is a really broad statement, but let's call it the 15 to high 30% rate. So if you can take an investor's dollar and you can earn them, 6%, 8%, 10%, 15% in an up market, whatever the number is. You earn this certain percentage above and beyond what the original dollar is. That's great, right? That's kind of our job. Our job is to be at the very least, as investment managers, we're supposed to be better than whatever our benchmark that we're competing with. But with tax planning, you can take that same dollar and I'm going to give some context here, but you can take that same dollar and maybe now you're saving 15, 20, 25, 30, 37% of that dollar. That's got some power. So let's define what is tax planning. Tax planning it's more than coming up with your end of year tax liability. It's here's how much you owe on your taxes, here's how much you're getting on your refund. It's way beyond that. It takes a look at the entirety of your financial situation and make sure that everything is working together so that you're getting an optimal tax liability. Now, let's have two quick disclaimers there, Michelle. One, again, not a CPA. I am not a CPA. Will Stye is a licensed CPA, even though he does not do tax preparation. He works with us. We do tax planning. We're not CPA. And two, this is not about not paying your fair share. Quite the contrary. So for those of you all that have, you business owners that have multiple tax filings, let's say you got a C Corp, let's say you got some S Corps, it's not about not paying your fair share. It's about rearranging things so that you are the most tax efficient you can be, both now and also the main thing of tax planning, Michelle, is to be forward looking, right?
Right.
Okay.
Future.
Right. And here's, and then it's also, some things happen like, for those of y'all that have retained earnings, if you don't recognize that word, that means probably you're a W-2 employee, maybe haven't dealt with the business. Any business owner is going to recognize retained earnings. Sometimes those tend to pile up. There are things that can be done there. You're really trying to rearrange things to pay your fair share, but be more efficient. And always remember this. This is really important. And I'm not saying this is right, wrong, or indifferent, but the IRS gives preferential treatment to earnings on investments over earnings on labor. It just is what it is. Capital gains historically, especially right now, are less than income tax.
Okay.
Okay, so what does that mean? That means there are ways of doing tax planning, working with your CPA team to get things in the proper place so that hopefully you can reduce your tax burden, again, by staying within the letter of the law, doing anything, just doing it more efficient. You're still paying your fair share. You're just doing it in a better manner. All right, very good?
Okay.
All right, what's next?
All right, wake up, people. That was so
I need Will
so
to describe
enthralling.
that one.
Yes. Okay, so this is the last article, and in keeping with our episode theme of all about Josh, it's from, guess what? Josh's website,
Now we're
GulfCoastFA.com.
There we go.
Shocker. I will say, I did not know this, and I read this article. This article is about last wills and testaments, which I actually do know that.
Yes, you.
And which I can do and do for people, but which is good because those just tell us that they want to hear more of me and less of you, which is not shocking at all.
Is that the winning formula?
Yeah, I think so. I mean,
that's why I wanted to talk about me.
Rumor has it. Yeah.
Talk about I.
So I was today years old when I learned that August is National Make a Will Month.
There it is.
And here we are, day 2 in it.
So August is National Make a Will Month.
Yes.
Okay, good.
Who knew? I did not.
Well, I
You
did.
You did.
That's right, because it's on my website.
That's correct. And did you make that up? No. But
no, it's National Make a Will Month.
okay, it's not on my calendar, so
well, there you go.
National Ice Cream Day and stuff like that is. But okay. And I appreciate it that it reminds everybody to consider making a will.
Right.
So it describes the differences between wills and trusts and gives some easy to follow basic steps to creating a will. I know that you included this article because, one, it's on your website and you want to talk about you today.
That's right.
And you were the one that provided it. And number 2, estate planning is an important piece of the client experience at Gulf Coast Financial Advisors. So do you care to jaw more and hear yourself talk some more about this?
I do, yes. It's a great website, by the way. Yes. So you should go, GulfCoastFA.com. All right, now all seriousness. So let's talk about this. Wills and trusts. So again, we're not attorneys. Michelle does have her JD from the University of Denver. She helps people write wills. She can do trusts. She can do all the things. Pretty cool. Main thing, I guess, is for a lot of people, what's the difference between a will versus a trust? So the primary difference, we could go down so many rabbit holes.
Yeah, there's
right.
Call us.
So let's do the primary difference. The primary difference is that a trust takes effect as soon as it's created and signed, while a will does only after you pass away.
Yep.
Now, there's 2 different types of trusts to consider. There's irrevocable and revocable. Irrevocable are trusts that cannot be changed or canceled after they've been signed. Revocable, obviously the opposite of that, they can be changed. The grantor has the right to change the terms or even end the trust, right?
That's right.
Now, do you need a will? I mean, what does a will do? It allows you to distribute your property, protect your loved ones after you pass away. It gives you peace of mind to you and your family. We talked about this on a previous episode, Michelle. We talked about how not to screw up passing on your assets to those behind. You typically starting the process of writing the will will start the process of having open communication with your family and your heirs, which it should. And you want to eliminate confusion. It could prevent family conflict, but but here's the thing: if you're gonna fight about it now.
Now, right? Where everybody's around.
I can tell you from personal experience, the worst thing is fighting it after there's nothing that the people that originally owned the asset or had the money could do anything.
The fighting costs money.
It does. Oh, tremendous. Typically,
only people that win are attorneys.
Only people that win are attorneys. So. All right, well, that's very good. So that is on GulfCoastFA.com. That's August. It's National Make a Will Month. Folks,
all right.
We can help. Not attorneys, but we can help with that. If you just give us a call, 251-327-2124. All right, Michelle, is that it for the headlines?
That's it.
Well, great job as always. These are always important pieces of information that impacts those in or near retirement. So listeners, again, if you have questions around these topics in our headlines, or if you got questions related to your investment strategy or your financial plan, why don't you give us a call? You can set an appointment up by calling us at 251-327-2124. You can also go on our website, GulfCoastFA.com, and click the Calendly link that allow you to set up a free, no pressure, no obligation meeting with me and the team. You find that in the upper right-hand corner. All right. So, all right, folks, coming up next, Josh's crystal ball and big mouth.
Ha ha.
Ha. What have been some of my predictions? Have I been right? Was I ever wrong? How wrong? Michelle's laughing. So what do I think is going to affect investors in the near future, or maybe the long-term future? We get to talk about all these things and poke a little fun at my big mouth. Stay tuned. Whether it's building a business from scratch with your own two hands and wanting to maximize the financial impact of those sacrifices, or growing a great nest egg by being a dedicated and reliable worker for years, or choosing to live a life well within your means in order to accomplish a lifelong dream of retirement, the last thing you want is to go with the wrong financial advice after you've worked so hard to accumulate your assets. You've also probably spent most of your life putting others' needs ahead of your own, and now it's your turn. We can help. Gulf Coast Financial Advisors is a locally owned, independent, fee-based financial planning, investment management, and tax planning practice. We have offices in Fairhope and Orange Beach. We serve all of Baldwin County and the Gulf Coast. We also have an easy-to-understand fee-for-service model with no sales quotas, no proprietary products. Our ultimate responsibility is to our clients' goals and dreams. You can reach us at 251-327-2124 or find us online at GulfCoastFA.com. That's Gulf, like the Gulf of Mexico, Coast, FA as in financialadvisor.com. Welcome back. Segment 3, here we come. Your host, Josh Knoll here, alongside co-host Michelle Lee. How you doing? Great.
I'm hanging in there.
That's right. All right, so folks, I am opinionated. I do have strong opinions at times, and I would say, to be fair, a radio show host that isn't at least somewhat opinionated probably would not be very interesting to listen to. Is that fair, Michelle?
I think that's very fair.
Well, and thank you. And also, I'm paid in my profession to offer professional guidance and my opinions to my clients. Otherwise, again, what use would I be? So
you could be a chat GBT.
Yeah, right. Yeah.
Whatever those are.
Sometimes I feel so strongly about something that I talk about it publicly on the various podcasts and radio shows I've had in the past. Sometimes I'll even make some predictions. And while I feel like I'm usually proved right, there are times where I swing and miss. So if you want to hear me beat my chest or maybe eat a little crow, let's get at it with Josh's crystal ball and big mouth. All right, Michelle, what's up first?
So, Josh, when we were in the Finger Lakes region of upstate New York this past week, we were perplexed because we saw a lady using a blowtorch to burn out weeds at a winery.
First time I've ever seen that.
It's the first time I'd ever seen that. So let's just use our own blowtorch and kick this off with a segment on your favorite.
Ugh.
Dun, 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 dun.
Crypto.
Everyone's favorite, crypto. As usual, there's been a ton of news around crypto recently. Including a mysterious death of a missing crypto millionaire in South America. It did not work out well, ending up dismembered in a suitcase.
It was not good.
That is not good crypto
news. It's not good. It's like mafia stuff.
Exactly. So, however, on the flip side, there were some favorable news for crypto. First, the SEC just confirmed that while they're considering treating nearly all cryptocurrencies as securities, they don't consider the OG coin, Bitcoin, to be a security.
Okay.
Also in the news is investment giant BlackRock has filed to offer a Bitcoin-based exchange-traded fund. That's cool. Now, as regular listeners will know, we've tried to be fair and balanced with crypto, even though I still maintain it's witchcraft. But does all this good news make you change what your big mouth has had to say about crypto on our show?
All right. I mean, what are we doing here, folks? So let's
We're getting dismembered in suitcases in Argentina.
Okay, so we're going to be fair. I'm going to be devil's advocate. That's probably happened in other financial situations as well. It just seems to follow this around a little bit. So let's do this. I'm gonna try to be fair here. Yes, there has been some good news around crypto. BlackRock, for those of you all not familiar with it, that is a huge investment company. They do a lot of index funds and things like that. I think there's still some positive news of somewhat around the underlying technology of Bitcoin, which is blockchain. So, as we've said in the past, is there a future with using blockchain on things? Maybe, probably. I don't know. I know the math and the process behind blockchain. Sometimes folks will claim that blockchain was invented with Bitcoin. That's not, as the son of a math teacher, I'm pretty sure that's not accurate.
That's how I
think blockchain's actually been around since the 90s. It's just the Bitcoin is the first time it was used to produce a cryptocurrency on said blockchain. I could be wrong. Crypto bro, get at us. Let us know if we're wrong here. Nonetheless, here's my thing. Here's my stance. It's always been. It continues to be. Cryptocurrency. There's not a sovereign nation on earth. Forget El Salvador. There's not a sovereign nation on earth that's going to allow its citizens to print its own private currency. Maybe in the 1800s with Wild Wild West in the United States, it's not going to happen in 2023 and beyond. Okay, so forget that. Now, 2, does that mean that all the projects that crypto is working on, where, for example, you can have a digital accompaniment to a physical thing, you buy a piece of art, and it's hard to determine who has ownership of that art. There is a accompanying blockchain technology that proves your ownership of that art, maybe even mimics the art. Okay, I see it to a little bit, but again, I'll say, okay, fine, but where's the revenue going to come from? Where does the revenue come from? And here's what if we're going to boil it down this way, Michelle, before we move on to our next thing, here's what I honestly think. California Gold Rush produced millions and millions and millions of gold, right?
Okay.
All right.
Nevada produced more, actually, even though it's called the Silver State.
And that's fine. Very, very, very few people, the prospectors, very few of them made it out wealthy. Do you know who actually benefited the most financially from?
Railroads.
Banks. Fair. What about the people that supplied the food? What about the people that supplied the tools and the wood and the housing? When they did, I don't have the study in front of me. We'll look it up. But they did a study that the actual enduring and long-going wealth that was produced during that region from the California Gold Rush was produced by the support system to support all of these people coming out and trying to get rich. I think that's exactly what's happened to crypto.
Okay.
I think with the exchanges, I think with the ETF, I think with all this stuff, the ones that are supplying the people that are doing the blockchain technology with security, with all that, I think they are the ones that have a chance at making it out and actually building something. I think the people that are out there going back and forth with these Beanie Baby blockchain or with these cryptocurrencies are going to be just like the prospectors from the California Gold Rush. That's my opinion.
All right.
We'll see.
Okay.
What's next?
It looks like discount website Overstock.com bought the intellectual property rights, which is a fancy way of saying they bought the brand rights for B Cubed.
Okay.
Yay! And it appears that for the nominal price of $21.5 million.
That's incredible.
Even more noteworthy is that Overstock.com decided to ditch their own name and move forward as Bed Bath & Beyond. What?
Right. All right.
So, both offering traditional BQ products as well as 600,000 new products that are, quote, cheaper than before. So what you got to say about this and your crystal ball on this one?
Well, okay. So the first thing, Big Mouth saying it was saddled with debt. That's anybody that dives into finance and knows a little bit about private equity. They don't do it every time. There's tons and tons of great private equity companies out there, but there's a lot of them that got into the retail space, basically just saddled these brands, Toys R Us, BBB.
Tuesday a.m.?
Probably. Yeah. Tuesday morning. They saddled them with all this debt to get their money back out, and these companies were just never had the cash flow to pay said debt. So that doesn't make me any dumber or brighter than anybody else watching this. But I do think, kind of thinking like, oh man, what if somebody came in and bought this? I mean, it's amazing that Overstock.com not only bought it for $21.5 million, which I would hazard a guess they'll make that back in the first 3 to 6 months.
Oh my gosh, so easy,
right?
And then maybe in a week.
And then to have the self-awareness to know that I didn't even know Overstock.com was still in business, to be honest with you. So to have the self-awareness to relabel themselves as Bed Bath & Beyond.com, that's
Clever.
incredible. So, but here's the main takeaway from this show. BBB, Bed Bath & Beyond, the ticker symbol, whatever it was a meme stock. Well, guess how much those sucker investors, how much they made out? They got wiped out with the bankruptcy, right?
Uh-huh.
And it was bumped up and all that nonsense. And here's the thing: there's going to be some of them that got out in time. The majority of it is people that I don't remember the abbreviation, but it says something to do like keeps hang in there, ride it through.
Okay.
Crypto does this too, and usually it's being the people who are saying that are the ones that are selling the positions behind the back,
Right.
and getting their money out while the common investor just burns to the ground, and it drives me nuts. So yeah, but my big mouth and crystal ball was dead on there. I wish I'd had 21.5 million. That would have been a great purchase.
And yes, no
nice
doubt.
job, Overstock.com. We'll
now referred to as Bed Bath & Beyond.
see. Yeah, that's right. Yeah.
Okay.
All right. Very good.
Okay. So far by my count, your big mouth and crystal ball now have one knockout with B cubed and one split decision with crypto.
Yep.
So let's see if you can survive this haymaker. I don't think that you're going to make the 10 count myself.
Right.
So just on our last coasting and retirement episode, you asked our listeners if this was as good as it gets when it comes to fixed interest investments. Unfortunately, answer to our episode's question appears to be a big fat no.
Right.
Because the Fed just hiked the Fed funds rate for the 11th time in its last 12 meetings, setting the benchmark overnight interest rate in the 5.25 to 5.5% range, which is apparently a level last seen just prior to the 2007 housing market
they were trying
crash.
to slow down the housing market
Exactly.
too late. But yeah, keep going.
Boo. So with that said, here comes the punch. Nearly every product or investment we discussed recently is now offering higher interest rates than what we just discussed publicly. For example, our buddy Chuck Schwab has a money market fund offering 5.24% yield on deposits of $1 million and 5.09% on deposits of less than $1 million or less than $1 million, which is significantly more than what your big mouth just shouted out to our huge and growing audience. What do you have to say about this?
Yeah, so I've lost my two front teeth here. So
Boom.
Okay, so here's
They're
the
fake
thing.
anyway.
Yeah, that's fair. Yeah, the motorcycle into a tree is never a good idea. All right, so a couple things. One, in defense, yes, obviously I was very off, but we intentionally decided. Normally we do kind of evergreen shows. Call it for every 3 evergreen shows, we'll do one that's kind of time stamped. Evergreen's going to be, one where we're talking about
Josh.
Yeah, pretty much. We decided to do a time-sensitive one, and we knew as soon as we put it out, man, this thing could be very dated very quickly. Didn't realize how quickly it was going to be dated. We knew there was the chance that the Fed was going to raise rates again. We just didn't realize the market was going to respond so quick and that they were willing to go even higher with their yield offerings. Now, folks, quick disclaimer on that. Michelle mentioned Charles Schwab, the money markets. We are not promoting the sell or anything like that. I do handle those, but that requires a deeper conversation than just calling up and throwing some money at a money market. There's things there. If you want to hear now, the rates are going to be off. Yeah, the last episode, if you want to hear a deeper dive on how these things work, and you can forgive my big mouth and ignore the yields that I mentioned. Check us out on Spotify. Just do Coasting Retirement on Spotify, or go to our website, gulfcoastfa.com. Go to the podcast tab. I do think, in defense, to put my hands up in front of my face, Michelle, I do think we did a good job of talking about the different types of fixed interest investments. We had MYGAs, we had money markets, we had bank CDs, which I don't do, but we still talked about them. So at least we got good information out there. But my goodness,
I learned stuff.
But I mean, the rates, the yields that we mentioned, I was off. One more?
All right, yeah. I'll ease up with this last one and let you preserve your dignity just for a spell. It's also something that I know you feel pretty passionate about. You stated that once investors truly understand the difference between wirehouse brokerage advisors and reps of independent registered investment advisor companies, commonly known as an RIA,
right,
they would overwhelmingly choose the RIA route more often than not. You also stated that people starting their career would start going with an IRA right off the bat, so they had ownership. So big mouth, right or wrong?
Well, a little bit of both, mostly wrong, and here's why. So the part where I was right, Michelle, is when it comes to the power of story, the RIA firms are absolutely kicking the butt of the wirehouses and the brokerages, all right? Primarily because the RIA, not all the time, but often allows that person to be fee-based or possibly even fee-only, Whereas traditionally, there's going to be a little bit more of a brokerage type feel or a broker dealer type feel, like with Ed Jones. So the power story, they're winning, especially when it comes to not just the power story, but also attracting top talent. It's not uncommon for an experienced wirehouse broker or advisor to
switch gears.
Yes, build a book of business, then go affiliate with another IRA or form their own.
Right.
However, on the flip side of that, the Power brand is still really strong. I mean, even Wells Fargo, which got about as bad news on the banking side as you could imagine,
still has for a while.
Still has a powerful brand.
Yeah.
And I don't have the numbers, but my guess is the amount of money that still goes into the big brands, if you will, probably still is a larger sum of money that's going into the RIAs. That would be my guess. I would argue the amount of money coming out with individual advisors leaving is probably more significant than those that are. What you hardly ever see, Michelle, is someone go RIA and then go back.
Right.
You just don't see that. It'd be like, it's like taking a step back, if you will. So now, what's the future? And we also talked about people starting their career. It's hard to start. I did everything in my career just backwards. It's a word I can't use on FTC would give me, but just butt backwards, I guess I would say. I did everything backwards. Started in my mid-30s, did everything the hard way. That's how I tend to do things. But the point of it is I built this thing from scratch, and it took longer. It would have been a heck of a lot easier to have a recognizable brand in the beginning. And just like everybody else that goes off on their own, I learned the hard way that it takes, generally speaking, 3 to 5 years to build a brand that people recognize, which is what we did. I could pull up a calendar, point to the 5-year anniversary, and I could show you where the business started immediately flipping at that point. And thankfully, it's been on trajectory upward since then. But it took that long to get the brand recognition compared to the Merrill or Morgan or that they've got national brands. Right. Michelle would even argue international brands. She's not wrong. But I do think, as I've always said, the future is RIA to some degree. Who knows? We'll see how the big wirehouses evolve over the time. They may get sick of seeing all of their top talent, or not all, a lot of their top talent walk out the door to go RIA. But it'll be curious to see how it goes. I know I did everything but backwards. I went in that direction. That's the direction that I believe in. That's the direction I'll continue going. So, all right, very good. Is that it?
That's a wrap.
Can I get my teeth back? My 2 front teeth. Oh, yeah. I want to talk about me and my 2 front teeth. All right, so listeners, I hope you enjoyed a peek behind the curtain on how I form my opinions and my predictions, and more importantly, that I'm willing to admit when I am wrong, which isn't very often, but as in the case with interest rates, just last week I was way off. Now, to our listeners that have more questions about the various investments and topics we discussed in this segment, we invite you to reach out to us. Call anytime, 251-327-2124. You can always make an appointment on our website at gulfcoastfa.com. That's Gulf like the Gulf of Mexico, Coast as in the show title, FA as in financialadvisor.com. There's a link. We've got great tabs. I mean, check out all the tabs if you will. We've done. I feel like we've done a great job with the website, but there's a link to my calendar on there. You can set a no obligation, no pressure conversation with me. And as we've discussed many times, when you call, I answer, generally speaking, most of the time. Even when I'm upstate New York with terrible phone service.
Yeah, it was a little difficult for you. I don't mind being off the grid.
Better reception in Wapapella, Missouri than there is in upstate New York. You figure that. Yeah. So, all right, so folks, that's it for us here this week in Coast River Retirement. I want to give a huge thank you to my lovely co-host, Michelle Lee Melton. Thank you.
You're welcome.
I thank you to our awesome radio station, FM Talk 106.5 out of Mobile. Many thanks to our provider of our show music. That's local band Sloth Racer. Sloth is in the slow animal. The music is not. And as always, my sincere appreciation to all of you out there that have been listening and joining us on this journey. We'd obviously love to be a part of your financial journey as well. Until we talk again next Sunday, have a wonderful and productive week. This has been Coasting Retirement with Josh Knoll.
Advisory services offered through Prime Capital Investment Advisors, LLC, a federally registered investment advisor. Prime Capital Investment Advisors, LLC, 6201 College Boulevard, 7th floor, Overland Park, Kansas, 66211. Prime Capital Investment Advisors, LLC, doing business as Prime Capital Wealth Management and Qualified Plan Advisors, and Gulf Coast Financial Advisors are not affiliated. Gulf Coast Financial Advisors, Prime Capital Investment Advisors, Prime Capital Wealth Management, and Qualified Plan Advisors do not provide tax, legal, or accounting advice. This content has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. The information provided herein is not a complete analysis of every material fact regarding any strategy. It is intended only to provide insight into the opinions of the author. All information presented is for educational purposes only and is not an offer or solicitation for the sale or purchase of any securities. Content offers commentary and generalized research, not personalized investment advice, and is for informational purposes only and does not constitute a complete description of our investment services or performance. All investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified legal professional and/or tax professional before implementing any strategy discussed here.